Welcome to the Closing Beat, everybody. Happy Thursday. How you doing out there? All right. Good. You missed me? Hey, it's a quick show that we do. We call it the Closing Beats, our stock market update show of the day. We cover all the good, the bad, and the ugly for the day. We'll go over everything, and then I'll take your questions at the end if I can, and we'll go from there. We're also playing a game. It's called Guess the Dow, jazzwealth.com/Guess the Dow. It's the bottom right-hand corner of your screen, and you can actually see, you can take a shot. Tell me where you think the Dow is going to close next week. If you're the closest without going over, we'll send you a $100 gift card, or if you're one of our customers, you can take the gift card, but we can also credit your account $100 as well. Our jazz artist of the week is Stan Getz. If you're looking forward to a little jazz tonight, want to play a little jazz? Hey, if you're one of our customers, come hang out with us in the Speakeasy tonight. It is our version of an old jazz club that we've built here, where we just kind of hang out, grab a drink, come hang out with us tonight. We're going to talk about negative interest rates, and then I've got a slew of updates as far as all kinds of things affecting your dough. So we're just going to hang out, go over everything, help you get your dough straight, as we like to say around here. And so I hope you'll join us tonight at 8 o'clock. If you're one of our customers, you already got the invite. All you got to do is click on it, go into the dojo, and check it out. We'll be there ready at 8 o'clock tonight. All right, let's talk about the stock market. You got a loss of about 0.5% on the Dow, just over 0.5% on the S&P, and about 1% on the old NASDAQ 100. If we go over to the charts and take a look here, that's the S&P. Let's go over to the Russell. The Russell 2000 was the best performer today, believe it or not. Held on to being positive right till the end of the day, largely thanks to a handful of different stocks here. We're going to take a look inside. It's going to be earnings related. You got BJ's Wholesale. This is a Sam's Club competitor. By the way, I think I'm gonna take Sam's Club up on their offer there with that deal. The $45 you pay to get in, and on your first purchase they give you $45 back. So it's a free membership essentially for a year. There's one right around the corner from here, and I don't know. I'm thinking about it. What do you guys think? Anyways, BJ's Wholesale did great, 21% higher on earnings. That helped everything out in the Russell 2000. Tell a doc. There you go. That stock was higher by 2% on the day. Continues to get a lot of excitement from the old virus issue there. Restoration Hardware was higher as well, 8.4%. These guys are killing it, man. This was one where Warren Buffett had participated right about here, actually. So he's working his way back to positive, but I don't think it was his pick, to be honest. But anyways, that was another one. And then you got Sonos. Yeah, the little speaker, Bluetooth speaker company. That they do more than that. But anyways, stock was higher by 20% as well. Yeah, a lot of things going on there in terms of what happened today with that stock. A lot of good news and a lot of extra volume today. So the Russell 2000 was the best performing index out of the group today, beating all the other ones there. The NASDAQ 100 was the worst performing index, which is kind of okay. If you're in the NASDAQ 100, it's outperformed. It's positive year to date, so it's okay that it pulls back just a little bit. That was your worst performer, and you know why? Is you didn't have your mega cap stocks in there, your super duper stocks that we talk about. Your Amazon down 2% on the day, and Netflix was one of the biggest laggards in the group there in terms of weighting the overall index down 2.5% back to the 20-period moving average. Facebook, by the way, getting extended here in the short term. Average over the next 5 days is down just over 1%. So you can expect that thing to pull back historically or statistically. You would think that anyways. But it was positive today, and we'll see what happens over the next couple days. Facebook's got a lot of good things going for them right now. A lot of positive momentum around some of the things they're doing with Facebook Rooms. I saw that last time I logged into Facebook. And also, of course, shopping between Facebook and Instagram. Great thing. We covered that on Outside the Virus today. But again, you didn't have your super duper caps out there today. Microsoft, a little bit lower today. This is another great example of how these guys have been lifting the markets. Notice how there's been a few days where these super duper caps have been kind of taken a break, not falling or collapsing or anything, but they've kind of taken a break, your FANG plus Microsoft, and because of that break, all of a sudden the markets have been a little bit weaker as well. You've had to be a stock picker in there. We'll cover that in just a second. Also, there was no show yesterday, and typically when I'm not here, the stock markets fall, which I know we all cheer for, we're excited about. It didn't happen, man. What's going on? It didn't happen. I have to take tomorrow off. Anyways, going over to the S&P 500, we continue to flirt with breaking through the 3,000 area, which would also put it above the 200-day moving average. Risk to rewards, the question here. Everybody's asking themselves, if we get above the 200-day, then the next stop would likely be at the prior highs. What's the likelihood that we just recover all of this and go back to normal? Well, I mean, it could happen, but people were measuring their risk relative to reward, meaning on the way up, there's sort of limited upside, and the chance of getting to that upside is sort of skewed right now. I don't know if it's a good idea, but on the downside, you got got anything from 10, 20, 30% to the downside if things get a lot worse in here. And so because of that, you have people a little bit skeptical here whether they should be participating. Now, you had good reason for the markets to fall today if they wanted to. We had, well, we've got 38.6 million people jobless at the moment. You had a increase. I'll just go over to it. That's not the one. We'll come back to that one in a second. There you go. Initial jobless claims. There you go. They fell week over week, however, still at record highs. If I take this guy out, you see only the purple there. You could just see way more than we're used to. If we zoom out as far as we can go here, it's I mean, look at that. All the way back to the 60s there. There is no other time in history we've had this many people unemployed. It's about 11% of the overall population, and almost 25% of all people that want to work cannot work here in the United States. That's crazy. One of the things that was sort of negative about this headline, even though it is retreating back towards normal, is continuing claims. Put the orange line on the screen there. I'll go back here just to the last 3 months. Continuing claims, which, by the way, lags by 1 week. So we don't have the most accurate data on this. Next week, we will have the data for continuing claims for those that were jobless this week going into next week. So it's a little bit confusing there. Anyways, that's trending higher. So those people that basically don't have a job are continuing to not have a job. That's not a good sign. You don't want to see that orange line headed higher if you are a bull. And if I could just back this out for a second, this is continuing claims here. What I'll do is just put in recessions. We'll go back up. We'll look out here. There you go. Look at every other time continuing claims had shot higher, we were in a recession, right? So most people think this is going to be a recession. We'll mark this as a recession. But every time that number was creeping higher, we were in a recession, and maybe didn't know it at the time, but we were there. It's a little bit tough there. So we're not looking good in that respect there. Also, back at it with the news of China. They're starting to fight with them again, I guess. And so that's starting to make headlines. Look, it's a political trap for Joe Biden, by the way, if you care about what's going on there. Basically, the argument that they're going to try to make politically is who is tougher on China, Joe Biden or Donald Trump? Donald Trump's essentially trapping Joe Biden by saying, look, I'm tougher on them and I'm taking action right now. Joe Biden will likely take the bait and then Donald Trump will shift and move back towards the economy. It is a common move by that man. And so we'll see what happens. I mean, I don't know if old Joe's thinking about that or he wants to be a part of that or is just going to move on and focus on the economy. If you're a Democrat and you want Joe Biden to win, you're hoping that he just pushes forward with economic news, how he would have handled the virus, how he's going to do things going forward, Obamacare, things like that. Anyway, so because of that, China gets to be in the mix right now, and so there's going to be a lot of that going forward. Right now, people don't seem to care too much, but we'll see how that goes going forward. It's definitely going to be interesting. On our FinTip show today, we talked about a number of things, investing in real estate using the micro apps. We talked about deals, Memorial Day deals. If you're interested in that sort of thing, rattled off a bunch of those that have good deals on appliances and clothes and things like that. Gave you a bunch of discount codes if you're interested in doing a little shopping over the Memorial Day holiday there. And our FinTips this week, we covered lots of great topics there. How to invest your emergency fund, because you may have to start doing that. And so you got a lot of great topics there to check out. Tomorrow we'll talk about ways to boost your retirement savings there without, we'll give you the good stuff there. So anyways, that's what you have there. Let's go over to the sector breakdown here for the day. You had 9 of 11 sectors lower on the day. Technically 10 if you use ETFs. You saw 9. Almost every sector at the moment, or at 10:30 in the morning, was higher. Almost all of them were positive. But by 11:30, they were all negative, and only a couple of them tried to recover through the rest of the day. Only 2 actually recovered. Let's take a look at some of them here. You got utilities. Okay, so utilities going forward, the next 7 days, utilities tends to be the sector that outperforms the most. 65% of the time over the last 20 years, it's positive. Average gain is 0.9%. So this is the sector that tends to get a little action, a little activity there. Volume was creeping up today. From a technical perspective, they've got a little work to do. You can see this downtrend here. I'll just draw it from here to here so you can see. It's basically the 50-day moving average. But you've got a lot of work for the utilities to do, maybe breaking through this downtrend here, which would be a good thing, and solidify this prior low as now the low in the short term. So you really got some work to do, but like $57. If you can see it trade above there, you kind of get the all clear sign that the downtrend's going to break there. But it's a brutal downtrend to try to break for the XLU. We'll keep track of that one as we go forward. Industrials were technically the only sector higher on the day. Up 1/4% on the day, thanks mostly to Boeing. Boeing had a great day today, up another 4%, moving higher there. RBC, you're going to see a lot of this, and I brought this up to customers the other 2 weeks ago. You're going to see a lot of people starting to say risk to reward, risk to reward. All of these stocks, sectors, markets, anything that they're looking at, the question is risk to reward right now because it's skewed, and we haven't seen that in quite a while. Typically, there's just slightly better than a 50% chance that something's going to go up, and slightly less than a 50% chance that something's going to go down. Right now, that is skewed very much to the downside. And so everybody's looking at these stocks going, okay, well, got to be a stock picker. It's a stock picker's market. Where do I go where the risk to reward is more favorable than the overall market? And RBC says Boeing is one of those stocks. They say it's going to 164 over the next 12 months. I think they'll likely raise that one, but that's where they're at today. So it helped the industrial sector. Also, throw a couple other things out at you. You got Honeywell did good today, 1.2%. And also, look at the airlines. Airlines did well. Alaska Airlines up 5.5% basically on the day. United Airlines almost up 4%, and Hawaii Airlines doesn't usually get a lot of attention. I'm sorry, not Hawaii Airlines. What was I trying to do? I'm trying to type it in there. There we go. Up as well. So airlines stuck out. We'll go through a few others. Why not? Delta Airlines got a little bit of a gain on the day. That's pretty weak at the moment. And American Airlines barely budged. Not a good sign if you like American Airlines. Barely budged on the day. We'll basically call that flat on the day. Southwest Airlines was one of the leaders today, at least for most of the day. We talked about it on Outside the Virus. They are seeing demand pick up, but they're trying to keep their bookings limited on their planes there, so they're sending extra planes on the flights. And, well, I don't know how long they're going to do that. That's awfully costly to do that with not 100% full flights. All right, technically speaking, industrials is a hot, sloppy mess at the moment. Last couple months have been perfectly sideways here. You got no trend to discern out of the last couple months, so not a whole lot going on there. You'd like to see the XLI start to put in a series of higher lows, give people the confidence that maybe this thing has bottom. For now, you don't have it. It is clearly a mess. There you go. Consumer discretionary up 1/3% on the day, back over the 200-day moving average. This was one of the better sectors from an ETF standpoint, which is sad. It was held back today by Amazon. Amazon makes up 24% of the overall sector. Amazon down 2%. However, obviously, it's been helping the sector. Just today, it took the day off. Really kind of a shame. It's a shame because retailers did well inside of there. You had TJ Maxx up 7%. That's going to be earnings related. Ross earnings are out at the moment. It was up 6.5% on that. And Limited Brands did really well. Almost 20% gain on the day. Victoria's Secret, Bed Bath & Beyond, Bath and Body Works. I always say it wrong. Anyways, they're closing a bunch of stores, and that's seen as a good thing for stocks. We covered that on Outside the Virus if you're interested in seeing that. Sector-wise, you got energy lower by 1.6% on the day. This was the worst sector, and that's because you had ExxonMobil down almost 2% on the day, and CVX down on the day by 1% as well. These were the ones that kind of drag in the mix there. Sector-wise, we can actually look at the sectors and say, this is a stock picker's market. We can actually look and see that those of you that are index funds, man, index funds all day long. That's what I want to do. We can see that you guys are changing your minds right now. So Wall Street, we can actually just spot it right off the chart, and I'm going to share that with you, which is a shame because that's what happens. I mean, it happens in every market, right? People, when the markets are going up, they go index fund, man. So you just go with that. You can't do any better. And then when the markets fall, everybody watches their buddies picking stocks and doing different things, and they go, well, maybe I'll just sell half of my index fund and I'll go pick stocks. And then you get frustrated because it doesn't always work in your favor. Let's take a look. So, typically when the markets move higher, you have sectors very close together. You occasionally have an outlier in both directions, but for the most part, sectors move together. Why is that? Because when you buy an index fund, you're buying all 11 sectors. I'm assuming most of you pick the S&P. So you're buying all 11 sectors. So therefore, when you buy the fund has to go buy the sectors have to buy the stocks. That's how that kind of works. And so right now, you see this massive spread between those that are performing well and those that are performing weak. There's no real one outlier on the upside or downside. They're all just sort of spread out, and you can kind of see that on the screen there, and that is very much proof that people are hand-picking the stocks that they want to invest in rather than just buying the index. What happens when the markets start to fall again? Everybody ditches the stocks that they hand-picked, and they go back to the index, right? They go back to the index there. It's the same on the way down. When you see the sectors all moving lower together in a very tight range, you look at that and you go, well, unfortunately, that's your index investors that have decided to just bail bail on the index and start doing something else, or they panicked and just sold and went to cash. So we saw that on the way down, and I don't blame you if you got a little nervous on that drop. I won't pick on you. But on the way back up, you're not sticking with your index, and it's proof by looking at the overall sectors as a whole. So it's kind of fun to watch the emotion in the markets as we try to make our way back higher. Gold down on the day by 1.7%, kind of choppy here as well. So gold's been a little sloppy. The trend is still very much intact. Obviously, it's a very strong uptrend. But as people look at this economy and say, well, we are getting back to normal, maybe things won't be as bad as expected, that money is rotating out of gold, going back into the markets. It's also rotating out of Bitcoin, which was supposed to be your, doom and gloom type product, and it turned out not to be that way. So you got a lot of disappointed people over there in the old Bitcoin world. The question is doom and gloom over? Are we ready to move on? Are we just going to go on to the election conversation now and somehow this is all just going to disappear? You have some politicians that feel that way. We'll see what happens. All right, some stocks we can point out here for you on the day. Oh, let's point out oil. Oil was a little higher. Yeah, it's topping out there. A little bit of a topping out there on oil. Expect to see that one pull back a little bit. We'll see what happens. Stocks individually. You had Royal Caribbean higher. No. Royal Caribbean was higher on the day. Norwegian Cruise Lines higher on the day by about 10% there. Credit Suisse was the analyst. Same thing, risk to reward here. They said risk to reward looks good. We believe all the negative issues about them having cash, credit available, loans, and things like that. They believe that's all priced in. I would agree with them. All priced in, and they said, okay, so from that standpoint, they like the entry here because all the news is priced in. That's their opinion, not my opinion. They think that $14 is essentially where you buy the, where you buy Norwegian Cruise Lines, and Royal Caribbean right here at $43 was their call. That was Credit Suisse if you want to look that up. All right, let's do your technical breakdown for the day. You had 5 new highs on the day. We already talked about one of them, Facebook hitting new all-time highs. $231 is where it closed on the day. Although it did finish lower, you had Amazon peak to new highs as well. So that one's been on the list for a while. And Chipotle also hit new highs and it basically closed flat. I mean, it looks pretty good in the short term. That trend continues. You also have Carrier, which is the spin-off from United Technologies. Remember, Otis Elevator and Carrier Air Condition spun off from United Technologies so that United Technologies and Raytheon could come together. Raytheon Technologies is the new name for that one. There we go. So they hit new 52-week highs. Remember, they're also in the S&P 500. And just for fun, Otis yesterday did hit new 52-week highs. Both of these stocks doing really well since the spin-off from United Technologies. You had 0 new 52-week lows on the day, and we'll move on to some charts that look sort of technical in nature, if you're interested in that thing. The S&P 500, remember, we're going to use this as our indicator today that things are still a little bit choppy and undecided. So really, if you're a technical trader, you're not necessarily looking for entries here, unless you're balancing out with some short positions or something. You're not really looking for positions now. You're looking to build a watch list. And so there's times where you sit on your hands and you look for ideas so that you can execute if your idea comes to true. And then there are times where you're taking action. This is one of those times you're building a watch list there. So a lot of this stuff is watch list type stuff today. Allstate it's a watch list type stock because the insurers mainly did well today. Allstate was a bit of an underperformer, but look at this little downtrend. What you're questioning here is today's low going to be a higher low? Is the stock going to start to recover from here and make its way back to the 200-day moving average? What you do, I mean, you don't do anything now. You're looking to see that comes true. You identify that comes true. If it moves back towards that uptrend there and around $98 breaks above, you'd feel good about that and maybe think, okay, am I happy with the risk to reward back to the 200-day moving average or not? And so that becomes a watch list type trade. Looking over at REITs here, you got American Tower. This is a cell tower REIT. Back to the 200-day moving average. It's sort of the same thing. You got a bit of a downtrend, a pullback here in the short term with some really scary days in there, but it's back to the 200-day moving average, and you're wondering, is this going to be a higher low, an equal low, some form of short-term support that then retraces and starts to give me the next bounce in the midst of an ultra sloppy uptrend? Well, that made me want to look over at Crown Castle. Nope, that's not it there. There you go, Crown Castle. Doing the same thing, but a little bit stronger. See, it didn't make it back to the 200-day moving average, so this one gets the relative strength award, and you go, okay, same thing. Got a downtrend forming here. I don't want to be a part of a downtrend. If you're looking to be a buyer, you're just looking to see, is this around the reversal area? It's too early to tell, but you got that on a watch list as well. And finally, we'll do ConAgra. ConAgra very sharply pulling back to the 50-day. Seems like the kind of stock you look at on a down day and assume that you're trying to pick a range in here somewhere around 30 31 to 31.50 to maybe pick on an entry there. I can't tell you to do that, of course, but just some technical charts maybe to look at. Also, Crown Castle was upgraded by Fitch. So maybe a reason why people have held on to that stock just a little bit more. All right, stocks in the news today. You got National Oil Well, NOV is the ticker symbol, down about 7%. They cut their dividend. They're the latest to cut their dividend there. Boston Scientific's down a little bit towards the 50-day moving average. They are doing, it's $1.5 billion in total in money that they're going to raise. They're going to do $750 million by diluting you guys and selling more shares. They are going to do the other $750 million in preferred convertible stock. Right, so it'd be preferred shares that you could eventually convert to common shares if you wanted to at some point. If I don't know why you would, but if you thought you wanted to, common stock starts to outperform. Maybe that's the case. Starbucks higher by 1/3% on the day. They say they're ahead of their recovery curve. So they've got this model in mind where they think assume how they're going to recover financially, and so they say we're ahead of that. Business is coming back a little bit faster than we expected. That's not a common theme, by the way, in retail, especially as you get down to the smaller businesses there. So a little bit sad. All right, so other stocks moving today. You got 4% lower on Best Buy overall. They withdrew their guidance and they gave zero hint as to what was going to happen going forward. Typically, when companies have been withdrawing their guidance, they at least gave you some clue as to how things are going. Best Buy didn't do that. Investors did not like that. Expedia down 3% on the day, missed on earnings, but the one, if you wanted to find something positive out of it, they said the number of trip cancellations is starting to improve. Right, so people are kind of hanging out, saying maybe I won't cancel that August, September, November trip and just play this thing out for a little bit. Doesn't mean they can't come back. It just means for now people are not canceling their trips as much. That's kind of a good sign for the economy too. Hormel breaking through the 50-day moving average on the day. Missed on earnings, basically, was the name of the game there. Limited Brands closing 300 stores. We covered that already. Macy's finished up 6% on the day. Not great. They think their sales in the first quarter here are going to be lower than expected. Stock's basically flat. $5. It's kind of hanging in there, waiting to get some better news out of them. We'll see. And Take-Two pulling back a little bit extended there in the short term. They missed on earnings. They did lower their guidance going forward, so at least they gave guidance, but also very extended in the short term. So people just saying, you're saying this next release of games is going to be light. Maybe I'll take some profit off the table and come back when you guys think things are looking a little bit better. All right, as far as earnings tomorrow, you got Alibaba. Boy, that one will be interesting, huh? Will they, won't they? Alibaba, Baidu also thinking about, they're not reporting earnings, but they're thinking about delisting themselves. I think it's a lot of talk at the moment, but we'll see what happens there. Earnings from Buckle comes out in the morning. You got Campbell Soup, John Deere, and Foot Locker. All of this will happen in the morning. No afternoon Friday earnings announcements, which is typical. Not much, nothing odd there. That's just the way they do that. Johnson & Johnson a little bit lower on the day. They got dividends, ex-dividend date, $1 they're paying out in dividends. Good for them. And then remember, you have West Pharma. Tomorrow is the day. West Pharma will take the place in the S&P 500. They're going to boot out Helmerich Payne. Helmerich Payne is basically flat on that news there. And that's about all I got. I'll take your questions here if I can and see what I can do for you. Oh boy, there's the China comments there. I love it. I love it. I love it. I love it. That's cool. You don't like the Otis elevator there? Some people were really against the regulators, especially, were really against that spinoff. They had to do it. I mean, they wanted to merge the companies there, but they had to. There was no argument. I mean, it was what they had to do. Kind of like the T-Mobile thing that was going on. Yeah. Does Luckin have any chance of a recovery? Yeah, that's called a lottery ticket. That's called a lottery ticket. If you buy that stock around $2, you're essentially saying, I assume I'm going to lose, but there's always a chance I'll get a free ticket, maybe get back to break even, maybe I'll win a little something, or maybe I hit a home run and, a couple years from now or something, they're back to performing normal and they've regained trust in terms of their financials, and we'll see what happens. What are your thoughts on the old service now in the short term? A little extended, right? So you maybe expect that it pulls back along with a lot of things, really. So it's not that there's something wrong with the stock, but maybe if you could see a pullback, I think that'd be healthy. So if you're looking to buy it, there's no reason I would say to chase it up here. I'd just be patient. It's called sitting on your hands, right? You stand up, you sit down, sit on your hands. Don't touch the buttons. Yeah. Oh, yeah. Yeah, so Gulfport Energy, a nice run off lows there, very good run, and just pulling back a little bit in the short term. So you got a lot of profit taking in the short term. Cheap, inexpensive stock that's just trying its hardest to get up and get going again. No news of any kind of reverse split or anything. I think they'd probably stay away from that right now. Seeing price targets around $4. So you've got some of the bigger guys out there thinking this thing's at least got a chance. So I don't have anything negative to say at the moment on that one. Yep. I love it. Do dividends become fractional shares? Meaning if you get paid a dividend. Yeah, if you get paid a dividend, let's say for whatever reason, you have a small account and you get like $1.50 in dividends. That money gets reinvested. Typically, it's automatic. You have to tell your brokerage firm if you don't want them to be automatically reinvested. Usually, the default is when you get a dividend, whatever that amount is, automatically gets reinvested if you're on one of those plans there. But yeah, that would be the answer. Mm-hmm. Any thoughts on TJX cutting their dividends there? No, not really. I know they did, but I'm not. I don't have anything to say about it. You'd say investors don't seem to care. Earnings are going well for them. I think, and typically in a softer economy, these guys stand out a little bit. Your Ross Stores, Marshalls, TJ Maxx, which is them. So it seems that investors don't really care. I wouldn't fight the trend on that one. Yeah. Oh, yeah. JCPenney closing stores, and it looks like on JCPenney they're going to get their wish. They wanted a very speedy bankruptcy hearing, and it looks like the judge agrees. So that would be, it would certainly be an outlier. Usually those things take a long time, but we'll see. You think Alibaba is a safe stock to hold? I'm assuming you're asking because of the delisting arguments out there at the moment. It's a lot of talk. Right? It's a lot of talk, trying to get some headlines here. If you like Alibaba as a company, nothing has changed with the company. Whether they will be allowed to list here or they will be forced to list somewhere else, completely different story. But the stock doesn't, the fundamentals of the stock don't change because of where they're listed. Maybe they have to go to Hong Kong or something. I don't know. But no, I wouldn't make any immediate decisions on things like JD.com, Baidu, Alibaba. If you like those companies and you had belief that they were something worthwhile investing in, what Congress is saying right now is just a lot of talk. Yeah. Oh, yeah. Yeah, ACB starting to be the standout out of the group there. They needed that badly. So very good news for them. And also in the HEROES Act, good news for these companies. I'm not going to say what types of companies they are because YouTube gets mad. But in the HEROES Act, there's actually, how do you say it, legislation for them to be able to use banks without the banks having fear that they're going to get in trouble. So they're essentially going to say, we'll allow you to have bank accounts in the names of people that do business in this arena, and we won't federally prosecute you or fine you in any way. That's also good news. So, I mean, across the board, that's good news for all of them. Because I know that's a problem out in a lot of places. Yeah. Oh, yeah. You think... Oh,
hey, wait! Before
Sorry.
you go watch one of our other great videos, have you had a chance to see our new Fin Tips video?
I don't know.
They focus on one term.
I don't know. We're switching all of this. You know, this is why they don't put me on TV. I don't even know what I did. Does it go there? I think it goes there. I don't know. You don't care about that stuff. What were we saying? Yeah, you're trading ADRs is essentially what you're saying. Yeah. Yep. You need a recession, maybe for that ACB. Be good news if for some reason the government said, hey, turns out we gave away a whole lot of money and we need to raise taxes, and everybody goes, no, don't raise my taxes. And they go, I tell you what, we'll tax this stuff and just make it legal. Maybe. I don't know if that's enough to offset all the money they're spending. We'll see. Opinion on Moderna doing that private offering? Yeah, kind of crazy, huh? And a lot of it. They're raising a lot of money, 1.2, and I'll bet you it's even higher than that. No, it was more than that. 1.3. 1.34 billion. Yep. It's fascinating. Yeah, it's fascinating. I'll tell you what, I'll raise money. Anyway, we'll get a bunch more people here. We'll do a bunch more videos, lessons, classes. We'll build software, all this great stuff. If anybody just feels like handing over that kind of money, at least there's a chance you get paid back. Could you imagine if you're like how quick the internet would find out if we raised like $1 billion and then we just took it? Not that we could or whatever, but oh my gosh. It's crazy the amount of money people can raise. I don't even know how you do it, to be honest. I do the markets, but holy cow. So if you know anybody, you guys, the address is on the website. Come on by. Give me a little knock on the door. We'll be here. Happy to let you invest. All right, before I get in trouble, I will move on from that. I appreciate you guys hanging out with me here today. Remember, if you're one of our customers tonight, grab a drink, come hang out with us. I think it's going to be a whiskey and wealth kind of night. Usually we call it wine and wealth. Yeah, it's going to be a whiskey and wealth. Yeah. All right, enjoy the rest of your day. We'll see you a little bit later, and get ready to learn about your dough. I got a lot to cover tonight. I'll do it quickly, and of course, if you can't make it, all the classes are archived for you, and we'll see you a little bit later.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.